Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing PJ Murphy, the CEO of FRG Resources Corp, which trades on the CSE under the symbol FRG and on the OTC under the symbol FRGGF. We currently cover Forge with research and have a buy rating and $1 per share target price on the company. PJ, great to have you here today.
Thanks, Ben. I'm really looking forward to this.
Great. So, with all that said, I'm going to leave it to you to walk myself as well as the viewers through the Forge story. I'll jump in along the way if I do have any questions, but we'll get into some Q&A after that.
No, that sounds great. And yeah, please interrupt me as I'm going if anything arises. But FRG, Forge Resources, let's get right into it. So we've got two projects, both excellent projects. Our first one is down in Colombia. So we've got a metallurgical and thermal coal project, and it's in an excellent area, really no issues in terms of security, no issues in terms of anything in terms of ESG. We've got full support from the community, as I'll get into in the presentation. So we're well underground with Estrella. So right now we're driving the decline towards the 8 coal seams, and those coal seams will be 50% met coal, 50% thermal coal. So with this project alone, once we're up and running and we're at full extraction, we're looking at generating $40 million of revenue just off this one project. Now we also have an excellent project up in the Yukon. So this is our gold copper project, the Alotta. So we're actively drilling that this summer. We've just finished phase one. Really good results from our 5 holes in phase one drilling. And then we'll be moving on to doing another 7 holes in phase two, which starts in September. So we'll get into some of those results as we go as well. So, executive team, advisory team. Now, a couple people to highlight on the advisory team. Matt Warder, so one of our senior advisors. He is the go-to coal guru in North America. So Matt's really helping us with our strategy, not just in developing everything down in Colombia, but also looking at acquisitions. So we're actively negotiating a number of different acquisitions of producing coal assets, and Matt's been instrumental there. We also have Russell Ball. So used to be CFO of Newmont Gold and Gold Corp. So really helping us up in the Yukon. So an excellent team. And then when we look at the technical team, the person, like, why are we in Colombia? So first of all, Colombia is the #1 district in the Americas when it comes to foreign capital investment per capita. So it's a great place to do business. And right now, why are we there? Boris Cordovas. So he's our country manager. Boris, we've had a relationship with him and his family for over 12 years. He's the one who found our property, and he's the one who's been instrumental in getting it fully permitted. And he's also the one who's identified 6 other properties that he's now working to get fully permitted. So Boris has really helped us integrate into the country, and he's a big reason why everything's gone so smoothly. So here we are in Santander, Colombia, our coal operation. Does the world still need coal? Absolutely. So you can see some of the highlights. So our met coal is for steel production, but thermal coal is still instrumental in keeping the lights on. When you look at India, you look at China, you look at the developing nations, and in Southeast Asia, as much as 42% of their electricity comes from thermal coal. And even with that, there's still rolling brownouts in a number of countries because they can't support the electrical grid. So the demand for thermal coal and met coal is still going to stay strong for a number of decades. Here's an overview so you can see where we are, just north of Bogota. And again, great area of the country to work in. So 50% coking coal, 50% thermal coal. And in terms of, yeah, this is getting a little bit too much. In terms of the infrastructure, So you can see that there is a rail line in green that goes directly to the port. Now, the beauty of what we've set up here is that we don't have to handle the infrastructure. So our offtake partner, which is the largest coal producer in the world, unfortunately, we can't name them right now because too many small companies have been trading off their name, so they don't permit it. As soon as we are extracting coal and we start selling that first batch of coal to them, then we can formally announce that agreement. So the beauty of this is our offtake partner is very well established in Colombia, and they're going to handle all the infrastructure. So we will sell to them free on truck right on our property. They'll buy it on our property. They'll handle the logistics of driving to their rail yard. They'll load it on their rail cars, and then they take it to their port, and then most of it will be shipped off to Southeast Asia. So again, we don't have to worry about those logistics. So what we're doing here, I mean, I'll show you a couple pictures of the property. So that picture on the left there, that's one of the many coal outcrops we have on our property. So you can see the coal seams right on surface. And in an ideal world, this would be an open pit mine. Even with our connections in Colombia, you cannot get permitted for an open pit coal mine. So we're going underground. So, but it's a nice shallow underground development that we're working on now. So we're making great progress to getting to those 8 coal seams, which you can see on the right-hand side there. And why do we have an agreement, an offtake agreement with one of the top coal producers in the world, or the top? Well, it's because of the quality of our coal. So we have very high BTUs, so up to almost 14,000 BTUs within our thermal coal, and our metallurgical coal is also really high quality. So it's in demand, and that's why this top coal producer will come buy it from us, and the contract is in place. When we look at how long we'll be producing, the mine life is 42 years. So we're already fully permitted for 180,000 tons of coal production per year. And as soon as we start getting into commercial extraction, we can then uplist that permit. We can double it to 360,000 tons per year. And looking at the existing prices, spot prices of coal, once we end up getting to that 360,000 tons production per year, at that point, we're looking at revenues of over $80 million a year. So this is a good image. So looking at, it's a couple months old, but here is our portal right there in the middle. So that's how we're already well underground, accessing those 8 coal seams, and then we'll be able to stockpile that coal on the surface. And again, this photo's from a couple of months ago. So we've got a team of 32 people, so working round the clock, advancing that decline and getting down to those seams. So again, on our property, there's just all kinds of coal on the surface, so those outcroppings. So lots of coal there. Again, 42 years worth of coal that we can extract. Just some core samples from the exploration. ESG, this is really, really important. So we're the only operation in this district. It's a beautiful rural district, and the support we've had from the community has been phenomenal. So we've employed a number of people from the community, so providing jobs really helps, but we're also improving the infrastructure. So improving the roadways, improving the electrical grid, and improving water delivery. So we're also setting up health centers. We're helping with the educational system. So again, very, very warmly received within the community, which really helps. And getting into the nuts and bolts of why we're doing this, why we're going to be successful, and looking at our per unit cost. So we'll be able to extract this coal at a per unit cost of $46 Canadian per ton. And that's industry leading. So we'll end up all in, free on truck, all our costs, all included. When we sell it to our offtake partner, will be $111 per ton. So again, industry leading. We're able to keep costs down, which means that we're profitable even where we are right now within the resource cycle. So coal prices are a bit depressed right now. However, we're still profitable across the board. And when we look at the future market for coal, speaking to Matt Warder on a regular basis and the other experts, they see coal prices, both met coal and thermal coal, really improving by the end of 2025 and then really starting to take off in 2026. So you can see our margins are very healthy, anywhere from 40 to 55%, depending on what we see as, the base, spot price for coal. And so bulk sampling, you'll see in our news releases and our literature, we talk a lot about this 20,000 ton bulk sampling program. So securities wise, there's certain restrictions on the language we can use. So this is what is recommended. Now, it's important to understand that once we start extracting coal, we're going to keep on going, until we reach our permitted maximum of 180,000 tons per year. And as mentioned, we can upscale that permit to 360,000 tons. But the way we have to share it with the public, we talk about this bulk sampling. So, and to give you an idea of the economics there, that 20,000 tons of coal as we sell to our offtake partner is going to bring in revenues, anywhere from 3 to 5 million, depending on the spot price of coal. So really good revenues right away. And we're projecting that we'll be in revenue in 2025 and keep on increasing that monthly revenue as we go, as we increase the amount of extraction. One thing to mention, we have one portal open right now. So as we start extracting coal from that one portal, we'll be able to take that team that's driving the decline and then move them over to our second portal location. So we're fully permitted for 3 portals on the property. And once we're at that 360,000 tons of production per year, all 3 portals will be open to support that. So again, fully permitted, 3 portals, and that's what's going to help us to get to that max amount of coal being extracted. Now, comparables is tough because there's really no one else doing this in the junior market in Canada. So you can see we've got Colonial Coal, which has 2 great properties in northern BC. They aren't permitted, but great properties there. Alpha Metallurgical Coal is a company that our special advisor, Matt Warder, has been very closely connected to, and they really built their market cap through acquisitions. That's something that we're aiming to do as well, and those conversations are actively progressing. And then some of the other really large coal producers. So again, comparables, there really isn't anyone else in the junior market in Canada doing what we're doing, and that's why the opportunity for investors is excellent. So, Ben, that wraps up the coal part of
Right.
the deck. So I don't know if you want to have questions now, or we'll just keep on going right on to the Yukon and looking at our gold copper property.
Yeah, let's keep going. I do have some questions with Estrella, but I think we'll have you go through the whole thing and then I'll circle back and we'll summarize everything.
No, that sounds good. So again, we're actively drilling up in the Yukon right now, and geographically, you can see that we're in the Dawson Range. So we're northwest of Whitehorse, and we're just below the casino property. So Western Copper and Gold's casino property, we're just over 40 kilometers southeast of that property, and have a very similar footprint and signature to the casino property. So in this Dawson Range, it's a famous, area for exploration within the Yukon, within Canada. And so far, we've been extremely happy with all our results. So we've drilled 11 holes to date, and we've reported on 9 of those. We're still awaiting the assays for hole number 10 and 11. And that's going to be, setting us up for phase 2, which commences in September. So once we get those last couple assays back, we'll have a really firm idea of where those next 7 holes will be drilled. We already have a good idea, but it was just going to fine tune exactly where we're going to spot those next 7 drill holes. So again, gives you a sense of the area and the other companies that are actively exploring in this area with great success. And in terms of what we see, a lot of work has gone into this property. So beyond the holes that we've drilled. So looking at the copper, looking at the gold. And one thing, when we look at this property, we've seen full mineralization, top to bottom mineralization on a 4 kilometer by 2 kilometer area. So we know we have a massive deposit here. And the plus of all of this, not only are we getting top to bottom mineralization on the holes we're drilling, but it's almost all surface mineralization. So the first 6 holes we drilled were a little bit deeper, going down to 500 meters. So recently we've been drilling down closer to 300 meters because that's where we're seeing the best results, the most mineralization. And then as more data points come in, we'll decide how to move forward. So we've gotten some really good results over the drill seasons of 2023, 2024, and 2025. Big things is, that's the one that you see over here is, from surface, we end up having 211 meters of 0.46 gold grams per ton. So really positive. And again, we're getting those similar figures with the drilling that we've been doing this past July. So we set up in June and we're drilling in June and July, and we got those 5 holes drilled. And, for the geologists out there, we're seeing some really interesting signatures, really interesting footprint all over this property. Again, that's what, keeps on surprising us, is how we have nonstop mineralization, 4 kilometers by 2 kilometers. And again, every hole is just top to bottom mineralization. It's just, we have a massive deposit here, and we're just now starting to prove out this resource. So an idea of when we drilled, so we started in 2023, drill campaign as well in 24, and then this year's drill campaign looking at 12 holes for a total of 4,000 meters. And in terms of where we've been drilling, so payoff zone is where we've drilled a number of holes, a little bit in alimony. What we're going to be focusing on now, so with all the data, with all the information we have now, we realize, this is a really rich porphyry system, and we realize that pipe, that center of the porphyry system, is further east, so more in the severance zone and possibly towards the commission zone. So phase 2 coming up in September of this year, we're going to be drilling more in this severance zone, drilling more towards the commission zone. So looking at our property further to the east, and that's where we expect to get closer to that pipe and really start to get higher grades. And just showing some of the highlights here. So visible gold in 4 different spots in 2 different holes. So both hole 8 and hole 9 showed the visible gold. So really promising, because you don't often get visible gold in these porphyry style systems. And the market cap gives you an idea of what's out there. I'm a very large shareholder myself. So I now have 4.6 million shares that I bought, out in the open market. So all with hard dollars. Our COO, Cole McClay, also has a very nice position. And then our biggest individual shareholder, Ralph Schmidtke, has 9.7 million shares. So we have some really strong internal buying, and we still, have had continued internal, buying by insiders, by Ralph Schmidtke and others over the last little bit. All right, Ben, that gets us through the deck. Tell you what, I'll stop sharing that now.
Amazing. No, thank you. I appreciate you running us through that. I think the presentation flows well. So let's go back to La Estrella quickly. Then we'll talk about Alotta again, and ultimately we'll do a little recap for everyone at the end. So my first question, and I think it might just be good for you to provide a little more clarity on the value of La Estrella having two different types of coal, both metallurgical and thermal, the marketability of that product, and maybe just explain the two differences for investors.
Yeah, no, absolutely. So metallurgical coal is used in the steel making as well as aluminum making sectors. And so it is used to make coke, and that coke is used in the steel making process. So that metallurgical coal, they take it into these, beehive type burners, get rid of all the impurities, boom, turn it into coke, made coal. So when we look at the spot value, spot price of metallurgical coal, it's traditionally significantly higher than thermal coal. So right now it's selling for about $190 American per ton. Contrast that with thermal coal, so used for, and we can also call it steam coal, used for the production of electricity. And its spot price is closer to around $112 US per ton right now. So it shows there is that range. Now, when things were doing extremely well in the resource cycle, met coal was up around $600 Canadian per ton. Thermal coal was double, almost triple what it is now. So, right where we're looking at the coal cycle, this is a great entry point for us because it allows us now to really enjoy this wave as we get back to those historical norms. So, we really are at the low point of the cycle right now.
Right, right. And then I guess your quality in particular, on the metallurgical side of things, is quite high quality. The BTUs are high. Can you just touch on that?
Yeah, so I mean, again, it's why our coal is in such high demand. So, metallurgical wise, we end up having just excellent properties across the board. Thermal, again, excellent properties across the board with the really high BTUs. What's going to happen is our offtake partner will come, buy it from us free on truck, right on our property. What they do with it then is up to them, but generally what happens, they'll use our high quality coal to blend in with the coal that they're actively producing in Northern Colombia that isn't as high quality. That way they can then sell their coal for a higher spot price. That's generally what happens there. And again, it's up to them. They can just, ship it as is off to their destination, which is usually Southeast Asia. I know one thing, Ben, I meant to touch on and get back to when we look at our unit costs, they're so low, and I didn't allude to or explain why that's the case. So there's a number of factors. Our cost of buying the property was, quite low. So again, our relationships in country really helped us with that. But the main factor is the cost of labor. So our head mining engineer, one of the top guys in Colombia, if he was working in North America, he'd be pulling down $25,000-$30,000 per month. We're paying him $5,500 a month Canadian. Same
Right.
thing. All our underground miners who are, working round the clock, we have three different shifts going. They're making anywhere from $1,200 a month to $1,500 a month Canadian, and those are really good wages. So that's what allows us to keep costs down and to be economical even where we are right now in the resource cycle.
Yeah, yeah. No, that certainly makes sense. And we do talk about the economics around this project in
Mm.
our initiation report. So, and when watching, if you do want to see a bit more of the breakdown into the numbers and whatnot, you can see our initiation report on our website, which we'll get into. Um, with regards to the offtake partner, obviously the logistics around them picking it up right at site is a huge benefit, and having that offtake partner secured again, something checking a box from a risk perspective is great to see. In terms of timelines, you mentioned the bulk sample. You want to have some revenues by late this year. Can you just talk about the timelines? Again, just to refresh investors on when we can expect some revenues to start rolling in.
Absolutely. Q4 of 2025. So we're making great progress, and we encountered that metallurgical coal seam just recently. So we had
Hmm.
the news release coming out a couple of weeks ago. We have been extracting that metallurgical coal seam and stockpiling it on surface, and we will continue to do that. So that was, again, there's coal seams all over the surface of this property. So we knew there was a chance that we'd encounter some coal as we're driving that decline towards the main eight seams. But it was great to get we got the lab results just last week. And it was great just to get such high quality coal from a coal seam, as we're driving that decline. But yeah, revenues in Q4 of 2025.
Awesome. Awesome. No, we're excited to see that. And yeah, great little benefit stumbling upon that seam and being able to
Mhm.
already extract some coal. On the tonnage, I just wanted to mention quickly, we are speaking in metric tons, not imperial. I know you guys
Correct.
report in that, and we did so in our initiation as well, but a lot of our readers and viewers understand things on the imperial side. So I did just want to make that clarity. Um, so 20,000 ton bulk sample, and then continuing to mine from that day forward, ramping up to the 180,000 tons per year that you guys currently have permitted. And then you're making headway on expanding that permit to 360,000 tons. And then just lastly, you mentioned right now you're driving the first portal. When do you expect to complete that portal? And then you're going to have that team directly dive into the next portal, if I'm not mistaken.
Completely, yeah. So that portal should be done in the next couple months. That's going to give us access to the coal seams, and then we drive a cross cut, across those eight coal seams.
Hmm.
Once we end up having that portion of the development completed, then the team will be able to open up that next portal and start driving that next portal down to the coal seams, accessing them at a different area, and then we can have 2 points of extraction, and then eventually we get all three portals open, have 3 points of extraction, and that's what's going to allow us to get to max extraction.
Right, right. Makes sense. And again, it's fairly straightforward compared to a deep underground gold mine, for example. Obviously, like you said, would have been ideal to be able to do this in an open pit fashion, but for this to be so close to surface and having these defined coal seams is certainly a benefit. And like you said, from a cost perspective, it's quite low. Um,
It
so
does,
again,
yeah, Ben, I'll
mhm,
echo that, just logistically, it makes it more straightforward for us to be able to have such a shallow tunnel. And you can see from the images that we have in our news releases in our deck, we're building this to North American standards. So, really well reinforced, nice big tunnel. And again, logistically, very straightforward, very predictable how it's working. It isn't the type of coal development, coal mine that is an elevator shaft going down a kilometer, or like you alluded to, something you might be seeing in other types of mining. So that's what gives us the cost containment and the predictability.
Yeah, yeah, certainly attractive. And I guess just to wrap up on that, um, again, in our initiation report, you're able to see all the economics down to the revenues that we're estimating Forge is able to produce over the next few years as they ramp things up. Additionally, we do touch on some of those comps, PJ. I know you mentioned there's not many out there, and that's where the opportunity is for you guys as well as investors investing in the company. But we do talk about that as well as we break down the metallurgical and thermal coal side of things, um, despite you already doing that on this call. But then, so pivoting over to Alotta in the Yukon, again, this is that sort of upside project that you guys have by way of exploration. Um, the three drill programs. We're into the third in 2025 here. So you just recently reported holes, I believe it was August 7th. Some great initial drill results. We're looking forward to the remaining three holes. Um, if I'm not mistaken,
Yeah, no,
two holes.
two that we've already drilled, and then 7 holes that we'll be
Right.
drilling in phase two.
Right. So two holes left in phase one. The assays are pending for that. We're looking forward to seeing those coming through. And then, like you mentioned, the 7 holes targeting more of the severance zone where you believe is, more fruit, lower hanging fruit for you guys to target in this program. Maybe you can just summarize what the plan would be going beyond this year. So interpreting the remaining results to come, what you guys plan for next year and the following. Obviously, this does seem like it's quite a large system and could require some capital to be put in there. So maybe you can touch on the plan for Alotta in the future here.
Yeah, no, it's just to continue drilling, continue to prove out this resource. So we're very confident that we have something huge here. Initial results are proving out that thesis, and we just keep on having to drill. We have an enormous, very highly mineralized area. So when, again, we make comparisons because we're close geographically to the casino deposit, Western copper and gold. So we've staked an area that's 5 times larger than theirs. And again, the footprint, the signature, everything is just lining up. So season after season, we're going to keep on drilling, we're going to keep on getting great results, and then we're going to prove out this resource.
Great. Yeah, and I guess I'll draw people to our most recent note or your press release just to take a look at the results that you did report in those first 3 holes. Pretty substantial drill holes, very close to surface, 300 meters, 270 meters, 240-meter intercepts, excuse me, some solid grades. So certainly excited to see the next couple holes as well as the phase two program later in the fall. Um, Pivoting to the company as a whole, maybe you can just touch on the capital requirements to continue developing La Estrella, the budgets around the program for phase two in Alotta, and how you sort of plan to allocate capital going forward as you start to come into a position where you may have some cash flows.
hmm I mean, to date, we've been very lean and mean. Our G&A expenses are very low. The money we've raised has gone almost exclusively into the ground, and we'll continue to do that. So we're in great shape in terms of capital in Estrella. When we look at Alotta. So we'll be raising 1.3 million in flow through to do that phase two of drilling. And yeah, the exciting phase for FRG is when we get into significant revenue down in Colombia. So that's when we'll have, numerous options at our disposal. So we can choose to be the only junior miner possibly ever, that can self-fund its exploration. So we can use that money to go and self-fund what's happening up in the Yukon, and we can be very unique as a junior miner, and that we can explore without dilution. So that's really attractive. Now, having a gold company and a coal company together isn't common. So there's also talk, internal and external, that may be spinning out Alotta, spinning out the gold portion of FRG into a new co, rewarding our investors with that is another option we have. Further on down the road, once we get into that 360,000 tons per year, we'll be in a position to issue dividends. We'll be in a position to do share buybacks if we decide that's the right move.
Yep.
One thing I've mentioned a few times is acquisitions. So there's a number of producing assets right now that are on the market, and we're actively negotiating those. So it's in a great position to be. So looking at FRG, we're going to be into significant revenue as a junior miner. So when you look at junior miners, very few of them get to this point, and we're just on, the edge of getting into that revenue. And then we'll have so many options at our disposal.
So that was interesting. You mentioned looking at other producing assets. You also, in the presentation, mentioned that Boris was or found, I believe it was 6 other projects in Colombia with existing permits. Maybe you can touch on that. Again, we're looking a little bit into the future here on growth initiatives. Obviously, the ultimate goal in the short term is getting La Estrella up and running. But just for further upside, maybe you could touch on the other projects that Boris has been looking at.
Yeah, no, our relationship with Boris is excellent. So he used to be president of the regional coal organization. And he's been in the coal business for decades now. So he has 6 other projects that he's working on, all in different stages of permitting. One of those is now fully permitted. So we're in active negotiations for that property as well. Boris will just continue to get the other 5 to that fully permitted stage. So that certainly is something we're looking at for acquisitions. We're also looking at properties that are already producing for acquisitions. So that's where we are.
Great, great. Okay, well, look, I didn't have any other questions. Was there any closing remarks you wanted to leave investors with?
Just looking at where we are in our chart, this is a great entry point for investors. Looking at what we're going to be doing over the next few months, again, excellent entry point for investors. We're a junior that has an exploration project up in the Yukon that shows amazing promise, where we have a coal project down in Colombia that is near-term revenue. This is a great time to come and be part of the story.
Mm-hmm. Mm-hmm. No, I agree. Certainly looking forward to seeing you guys execute throughout the rest of the year and into 2026. Again, thank you for walking us through the presentation and answering some of the questions that I had. Sounds like an exciting time ahead, and for our followers, I mentioned it throughout here, but if you haven't seen our research on Forge, you can find it all on our website at atriumresearch.ca and subscribe for updates as PJ executes. And again, PJ, thanks for your time today.
No, thanks a lot, Ben. I enjoyed it.